Well, hello there. Welcome back to Friday evening. Um, Welcome back to the weekend video. This is Enda, obviously, from bullways.org. Thanks for joining me. Again, we've got through, excuse me, another week. And today was a particularly interesting day, which we were looking at last night for the possibility of this particularly interesting day. But it looks like we have it. And hey, let's just get into it, and I will go over why I think it was an interesting day. Okay, as usual, I'm going to go through the US dollar FX markets, the big three. I'm going to go through the big stock markets in the US, the big two, and I'm going to go into precious metals and crude oil and treasuries, as per usual. We'll start in the 4-hour chart and we'll work down to the hourly chart. Okay, I'm actually on the hourly chart. This is euro dollar. We'll go to the 4-hour chart. Alrighty. So euro dollar. I'm working with, as I said last week, I'm working with two particular, two distinct wave counts here. So far, so good on the current wave count. We've got a nice downside, a bearish cross again on the MAs just today. I think today, yeah. Well, no, maybe yesterday. So for momentum traders, that would be an indicator again that the downtrend is still in force, but there's still a possibility of another leg up in a larger wave two, and that is the alternate count right now. So far we've got three waves up. This could turn out to be a 3-3-5. Three waves and 5 waves up in a larger flat wave two. And for now, we've still got let's get to the hourly chart. For now, that's the wave 2 high there. Still got the downside bias, the bearish bias is still in force. I'll change my mind on that. Let's say if we get a push back up into an impulsive push, let's say back up above that previous fourth wave there, let's say about 117 again. If we if we cross impulsively above 117 again early next week, that would kind of indicate that the alternate count is most likely in force. But for now, we've got 5 waves down. We're looking at possibly a running flat wave 3 complete. Kind of split the hairs on that one, but for next week, we'd look for another impulse pattern on a lower degree, which would complete before that possible wave 2 there, maybe complete below 115.50, and then a run down into wave 3. The flip side, obviously, is a break of 117, but we'll keep an eye on that. Yeah, that's euro dollar complete. Possible further downside next week with one caveat on the larger wave 2. Okay, this is pound dollar, and we got a triggering of the alternate count in pound dollar today, which actually does take into account the possibility of a larger second wave at one lower degree than euro dollar. So this wave 2 green would be up here somewhere in the, say, the 50% retracement level would be 135.20. So a possible push in wave C up to 135.20 on the cards in cable next week. So good chance of a 400 maybe point rally here. And if that's the case, excuse me, I'm suffering still. If that's the case in cable, it may well indicate that euro dollar might flip to the alternate count as well. So that's worth keeping an eye on. Let's see the action today. The rally of first of all, that's the wave A high there. This is obviously the alternate count. So we have 3 waves up in A, 3 waves down in B. That's a pretty clear 3 waves. It never really, well, there was one way of counting it in a 5-wave pattern, but it just kind of didn't. It hasn't set well for a while now, and that's why we've been looking at the alternate count. But today we got a nice rally. Hard to know whether that'll. I mean, we could be looking at wave 1 here and wave 2 there, and we could already be rallying in wave 3, and that's a decent possibility. I think if we get a kind of a three-wave decline on the overnight, maybe on Monday, which hangs above 130, then we could be looking at an extension in a possible third wave here. So either way, we should expect 5 waves up into about 134.40. So from here, that's about 350 points or so. But obviously, a break of 129.20 then again will switch back to the previous count, which is now the alternate count. And you can look back on the charts there to figure that one. Actually, I haven't updated. I should throw that previous count in as the alternate here. So hey, why not do that now? There was someone who said to me once that if it takes, where is that? If it takes 2 minutes to do, you should do it now, and not put it off. But I'm a great I'm a great believer in procrastination as well. Okay, so that's the alternate wave 2 possibility that we have an ongoing 1-2-1-2 pattern, maybe to the downside here. We'll keep an eye on that. Okay, dollar yen gave us a nice surprise to the upside. Not surprise. We were looking for a rally in wave 3, and we kept keeping. Excuse me. We kept getting extension after extension. Small corrective decline followed by a nice impulsive rally, small corrective decline, impulsive rally, small decline, impulsive rally. So it was obviously the unfolding of a 5-wave pattern in a series of lower degree 4th and 5th waves up until we hit the kind of target level there, which was at the 161.8. Actually, we got above that 161.8 level. So for now, we're still working on wave 1 up, running flat wave 2, possible wave 1, 2, and now 3 of 3, which would mean that we're now moving into wave 4 of 3, and again another run higher in wave 5 of 3, which would be somewhere up in the 117s, I reckon. But one day at a time, we'll work on that. Excuse me, and we'll see how that pans out next week. For now, we still need to keep an eye on the ongoing correction in wave 4, and we'll see how that plays out. Let's get into the hourly chart there to take a look at that. The wave 4, there's a possibility that it's already well underway. There's a possibility that wave C of 4 is already underway. We've already hit previous 4th wave support there, initial support. Here's the wave 1 here, low at 111.82. So we don't want to see wave 4 breaking 111.82. If that does happen, then we'll have to kind of switch tack again to the larger alternate pattern, which would be this larger second wave, which could even take prices down to the 108. If we look, maybe initial support would be 109.80, so between 109.80 and 108 is support for that alternate count. Okay, so in the short term, on the overnight Monday, we'd be looking to see how this 3-wave corrective pattern unfolds. I mean, we could have wave A complete there, but we could also be working on a larger wave A. So for now, we'll just see how the 4th wave correction unfolds. There's nothing we can really do until it does show us that it's nearing possibly completing. So for early next week, say into Tuesday, we'd be looking at how just track how wave 4 unfolds. Okay, so let's get into stocks. Okay, the Dow here is the 4-hour chart of the Dow. That's the previous all-time high. We've got an A, B, and C down into wave 4. And now I've been tracking this a possible ending diagonal wave 5, so with 3 in turn. Each wave within the impulse wave 5 traces out 3 waves itself. So we have 3 waves in 1, 3 waves in 2, 3 waves in 3, 3 waves in 4, and a large 3 waves in 5. And the reason I'm kind of gravitating towards that is this nice expanded flat correction there in the middle, which could either have been a wave 4 or a wave B. We're going for the wave B here, so Off that wave B with a nice final rally into the highs today, and this evening we're selling off pretty, or today, yesterday and today we sold off pretty impulsively. So let's get down into the top here and see how that is playing out. Suffice to say that I think this market is topping again, just like we were looking at back in January. So from here on out, we want to see 5 waves down off the high, and we want to see an impulse wave pointing lower again into the next depression. Okay, I say that flippantly. Now, there's a couple of ways you can look at this. Obviously, this is a derivative chart, so it's not exactly, the internal highs there and lows are slightly skewed from the cash market. So I think we can count 5 waves down, possibly still ongoing, or you could say that that's a 1-2 pattern. Splitting hairs on that, but we're still looking at the possibility of a 5 wave impulse pattern to the downside. We got a nice break of initial support today. Well, we're sitting kind of at initial support, which is 26,363, and I was saying to you guys that I wasn't. Well, that was the initial level to kind of perk our interest to the downside. The next one is, again, the previous 4th wave. We've got 4th waves. We're just looking at 4th and 2nd waves here. So the next 4th wave, and one lesser degree, was 25,753. So around the 25,750 level. And if we get back down into the 25s again, I think that'll rule out this bull market. I think we were looking at these trend channels during the week here, and we got an initial break of that on Thursday, or was that Thursday? Yeah, Thursday. So Thursday afternoon we got an initial break of that first trend channel. Now we're down below the 2nd trend channel in red here, and we're fast approaching the 3rd trend channel. So these are 3 trend channels of impulse waves at 3 different degrees of trend. So we start breaking below this particular trend channel here, then it'll definitely point us in the direction of the bearish count. Let's go back to the 4-hour chart for a second. We see we have a peaking MACD, actually declining MACD, divergent MACD again. And we got a nice break to the downside in RSI off, let's say, a double top, sorry, not double top, lower high in RSI. So lower highs in MACD, lower highs in RSI, and a nice breakdown today. Watch this 200 period moving average there on the 4-hour chart. That comes in at 26,200. So that's another level for us to, we're getting nice kind of indicators here and levels to keep an eye on. But from here, for next week, we want to see if we get an impulse wave off the high to kind of point us lower in the longer term, or the medium term at least anyway. For me, 25,750 seems to be the one to watch next week. Okay, so let's move on to gold. So 4-hour chart in gold. Again, I'm looking at a 1-2 pattern to the upside. This kind of ongoing correction that we've had over the last while is nothing but corrective. I mean, the market has basically gone nowhere, flatlined. So I think we're shifting to a nice, a positive, let's say, a period of positive action in gold, rather than the last 6 or 8 months, which have been just brutal, basically, for gold. And actually, on top of that, the last 7 years. So we want to break that cycle. It's been a long downtrend, so it's time to kind of start pushing higher again. And I have some targets up around the 1600 level. So for the medium term into next year, the next 6 months or so, that's kind of where I'm looking at, 1600 for gold. Okay, so this is the hourly chart. This is the possible 1-2-1-2 pattern that's we're working on here. 5 waves up in wave 1 in blue, our brackets. Very convoluted probably a double combination there in wave 2, and then 1, 2, 3 possible contraction triangle, wave 4. So for Monday we'll be looking again. For the last while, I've been looking at this little band of resistance here, 1214 to 1217, a break of that to 1217 level, and the completion of another 5-wave pattern off the low at 1181 will be our best signal yet that this market has definitely turned. We have 2 nice 5-wave patterns to the upside. Let's see if we can follow that by 3 waves and a rally into wave, a possible third of a third wave up in gold. Okay. Let's move on to this is crude oil, 4-hour chart again. A couple of competing patterns at this moment in time. We're up at that $75 level, or down below that $75 level again, which does not bode well for the crude market. We're looking for a peak, obviously, in either a wave B, a very large degree wave B, or a fourth wave. So if we go into the weekly chart in crude oil, you can see that's the all-time high there in 2008. So we have wave A down, a possible 3-wave wave B, maybe a running flat, or we have the wave B high in 2013. Either way, you look for a B wave high or a 4th wave high, and then a run down into wave 5. Either way, both ways that you want to, sorry, excuse me, either way I split this. I'm still very much bearish on crude oil right now. Yeah, the 4-hour chart. So we're looking for wave 5 blue to complete there. Possible 1, 2, 3 complete, and maybe into 4 right now. So here's the hourly chart. The waves are getting smaller. The degree of the waves, it seems to be kind of contracting. So in general, we have on the 4-hour chart we have another top in momentum. Again, and a shift to the downside. So, and we're back at that 50-period moving average again. So let's see early next week. Do we get a break of that kind of positive trend? Do we get a breakout down below this trend channel? So what I'm looking at here in the alternate count is a possible completed pattern. But that's kind of open for debate at the moment. Next week, we'll stick with the operating pattern. Let's see if we get wave 4 completed, 3 waves in wave 4 completed. You want to see wave 4 hold above 71.17 anyway. So that's the previous wave 1 high. So let's see if wave 4 holds above 71.17 and we get a run up into 76 again in wave 5. But we're at the end of this trend either way. Okay, this is the S&P. So again, the S&P, well, the pattern in the S&P is slightly different. It always has been. I don't know how many times I've said this. So the previous late January peak, early February peak was wave A. We've got a triangle wave 4, which did not work which has never fitted with the Dow because we got an new interim low in the Dow. So that was a 3-wave decline in the Dow. So we had a pretty clear triangle in the S&P, and now we're moving up into a 5th wave. So I think we could be possibilities that were completed on this 5th wave up. But let's get down into the hourly chart. Oh, by the way, that's wave 5 green, of 5 blue, of 5 red, of 5 black. So that's 4 degrees, 5, 6 degrees at least of trend that we're working on here. So we have a possible 5-wave pattern to the downside here. A nice sell-off again. We were looking for a sell-off today, and we got a nice sell-off. We have support at 28.63, and so far the price is held above that. We've been looking at that 28.63 level for the last, no matter which way we've cycled through these wave counts, we have been looking at that 28.63 level. That's initial support. And again, below that, the wave 2, we've got 28, let's say a flat 2800 there. And again, below that, the previous 4th wave is 2791. So we've got a nice cluster of supports here. And another possible top. So let's see how this 5-3 pattern develops. Do we get an impulse, a clear impulse in the S&P? And if we do, then we will switch to full bearish mode. Okay, so let's get on to silver. So silver is, again, I'm looking for a bottom in silver. We've got a momentum buy signal here with the bullish cross. Let's see how the internal pattern here. The internal pattern here is it's not as favorable as gold. It's not as nice as gold, but it can still work with it. So the pattern that I'm working with in silver is a wave 1, a very large running flat wave 2, and we could be seeing another 1-2 pattern completing at Thursday's lows there. And maybe that spike, that little run up today, is the start of wave 3 of 3. But I see again that we've got another little couple of red candles there, which I'm not happy to see, obviously, but we'll just have to work with them. Again, the decline, the momentum seems to be shifting to the upside anyway, because we get these nice spikes, successive spikes up in silver, and then these kind of long, drawn out, dragging corrective patterns to the downside. So from a purely kind of price action point of view, you can see the pendulum starting to shift in silver anyway. So for now, for what it's worth, we do have a series of 1-2 patterns to the upside, and we're looking for a break of that key 15 level in a possible third of a third. So let's see if we get that next week. Okay, let's get on to treasuries. We've had another spill down in treasuries this week, which is just not good at all for for the general working man in the US, because I don't want to be on the end of I don't want to be on the receiving end of that interest bill when these large amounts of debt are going to have to be rolled over the next 2 years and 3 years, like we were looking at during the week there. I think it's in excess of $6 trillion in the next 5 years has to be rolled. And if the market is shifting from a long-term 30-year bull market in treasuries to a bear market in treasuries, well then, I don't want to be the one that has to foot that interest bill. It could easily start gobbling up huge chunks of the budget every year. But for now, I think we have another 5 waves down in wave 1 in blue here off the end of a triangle. This is the 10-year treasury price, and we're looking for a 3-wave counter trend correction into resistance at about 119. You can call it a flat 119 at the 50% retracement level, but we'll see how this a possible wave 5 of 1. We'll see how that develops early next week, because we could even get further down the road. We could even get further declines, which would be either way, we'd still have to get a 3-wave correction to the upside. So we're still looking for that 3-wave correction. You can see here on the 4-hour chart, we've got a nice 1, 2, 3, 4, and 5. We're down. We're seriously oversold for the short term, or in the medium term 4-hour chart. So we're going to get some sort of counter trend correction higher next week. You get the previous 4th wave there at 118.90, and 50% retracement at about 119. So that's kind of where the eyes are focused on next week, and that completes for 9 markets. Wishing you all a great weekend. Thanks for watching, and thanks so much for being part of bullways.org. And we will see you on Monday evening again. And God bless, Godspeed, and have a great weekend. Bye-bye.